you've been blaming your strategy. The entries are wrong, the indicator is lagging, the time frame isn't right. So you tweak it, test something new, start again and still the same results. Here's what I know after studying how traders actually fail. The strategy is almost never the problem. The problem is what happens between your ears the moment real money is on the line. Today I'm going to show you exactly what that looks like, and more importantly, how to fix it. Think about the last losing trade you had, not the mechanics of it, the feeling. The moment it started going against you, did you follow your plan or did something shift? Maybe you held on a bit longer than your stop said. Maybe you sized up because you were confident. Maybe you jumped in early because you didn't want to miss the move. Those aren't strategy failures. Those are discipline failures. And every single one of them has a name, a psychological trap that traders fall into over and over, usually without realizing it. Once you can name them, you can catch them. And once you can catch them, your entire trading changes with the same strategy you already have. There are 4 discipline killers I see wipe out more trading accounts than any bad strategy ever could. Killer 1, loss aversion bias. The psychological pain of losing money is roughly twice as powerful as the pleasure of gaining the same amount. Which means, when a trade goes against you, your brain is screaming louder than it does when you're winning. That scream is what makes you move your stop, hold on too long, take profits too early on a winner to compensate. Your brain is trying to protect you and destroying your edge in the process. Killer 2, revenge trading. You take a loss. It feels personal, like the market beat you. So you go straight back in, usually bigger, trying to recover it fast. But now you're not trading your system, you're trading your ego. And the market has zero interest in your feelings. Revenge trades are almost always losers, and they turn a manageable loss into an account-threatening one. Killer 3, confirmation bias. You decide you want to go long. Now suddenly every piece of analysis you do is finding reasons to go long. You're not analyzing the market. You're building a case for what you've already decided. Real discipline means looking for reasons not to take a trade as hard as you look for reasons to take it. Killer 4, overconfidence after a win streak. You've had 5 good trades in a row. You feel unstoppable, so you size up. You take setups you'd normally skip. You stop following your checklist because you've got the touch. This is exactly when the market takes it all back, because you've stopped treating it with respect. So what do you actually do about this? Because knowing these traps exist isn't enough. In the moment, under pressure, the knowledge doesn't automatically kick in. What kicks in is emotion. The only thing that beats emotion in trading is process. A pre-trade process is a fixed checklist you run through before every single trade, without exception. It slows down the decision just enough to let your rational brain catch up with your emotional one. It forces you to answer specific questions before you click. Questions like, is this set up in my plan? Is my stop at the right level before I enter, not after? What is my exact risk on this trade? Am I entering because of the data or because I'm bored, frustrated, or chasing? When you have that process locked in and you follow it consistently, the 4 killers I just described lose most of their power. Not all, but most. I put together a pre-trade discipline checklist. It's exactly the process I'd use, broken into a simple, quick format you can run through in under 2 minutes before any trade. And if you want to build this as a 30-day habit rather than just a checklist, there's a full 30-day trader discipline system in the same shop. Links are in the description. Both are under $20 and the checklist is $4. Which of those 4 discipline killers has cost you the most money? Drop it in the comments. I genuinely want to know, and I'll be replying. Hit like if this hit home, subscribe if you're new. And if you want to understand the macro forces driving the markets you trade, I just launched a second channel called Macro Lens, data-driven economic analysis, no hype. Link in the description. See you in the next one.